Before we begin, we'd like to give special thanks to all of our sponsors for helping make this event possible each year. Specifically, thank you to CRL FormFox for being our title sponsor for 5 consecutive years. And thank you to our platinum sponsors, AuraSure Technologies, Psychmedics, Samba Safety, UKG, and Quest Diagnostics.
Well, thanks for joining us today. Today is a roundtable discussion, folks focusing on the whole truck and all you need to know about asset compliance. We have 5 subject matter experts joining us today. Thank you to all of you for setting the time aside to participate in today's discussion. My name is Ray Proctor. I'm an area leader for DISA. I've been with the company since February of 2019. But I've been in the transportation industry for 25 plus years. Today on this webinar, we have Mr. Carmen Martirana. He's the Chief Executive Director for IFTA, Inc. Sylvia Ruiz, who's our Fleet Director for Hanson Adkins out of Southern California. Eric Schreiber, who's a Transportation Compliance Director for DISA Transportation out of Hudson, Ohio. We have Rachel Irwin, who's a compliance specialist for us at that same location. And we have Victoria Van Gogh, who's our licensing and permitting specialist out of California that focuses on local California IRP. Welcome to all of you. And again, thanks for jumping on this webinar today. I'd like to take a moment for each of you to introduce yourselves and give us a little bit of background and insight. And we're going to start with Carmen. I'm going to push it over to you.
Thank you, Ray. First, thank you for allowing me to participate in this panel discussion. Looking forward to it. So, as you said, my name's Carmen Martirana. I'm the Chief Executive Officer of IFTA Incorporated. Prior to joining IFTA, I was a tax administrator in the state of New York. Supervised auditors that did, among other things, IFTA audit, highway use tax audit, corporation tax audit, personal income tax audit. Worked there for a little over 30 years, and then had the opportunity to join IFTA as the Chief Executive Officer. I've been involved in transportation and international fuel tax agreement for over 35 years, both with the state of New York and now as the Chief Executive Officer. So as far as my background goes, I have 4 different degrees, CPA in 3 different states, and I taught at a college for 26 years while I worked for New York State Tax. So thanks again.
Awesome. Welcome. Sylvia, could you give us a little background, please?
Well, I have been in the trucking industry at least over 35 years. Started with a licensing agent. Actually, I started with a trucking company, Global Van Lines, who is now extinct, for 10 years. And then from there, I was recruited to an outside licensing agent on the Go Transportation Services in 1996, where I remained until 2013, when this customer I'm with now hired me in-house, and have been here since 2013 with a 2-year vacation. And I came back this year in August. Primarily, I handle all the licensing and titling and permitting for Hanson and Adkins, as well as now dealing with their sales tax exemption processing for our trailers. And that's pretty much in a nutshell. I pretty much am a processor, even though I do lead this department. And I've been very happy here. And I really enjoy this industry. It's changed a lot since I started back in 1985 in this industry. And it's really progressed a lot. And especially even in the last couple of years that I've been gone, the electronic reporting of all the logs and fuel purchases, that is all new to me, and I am now trying to get a grasp on it.
Great. We appreciate you coming here with us today, and we're going to talk about some of those changes a little bit later on in the conversation. I think they're key in regards to some of the education we'd like to part with the audience today. Our business has changed, and it's going to change further. We look forward in regards to some of the mandates that are changing, electrification, not to take away from the subject matter expert, but we'll visit those topics a little bit later. They're very important. Eric, I'm going to push it over to you.
Yes, Eric Shriver, Director of Vehicle Services here in our Hudson, Ohio location. Also oversee some offices in Palmer, Massachusetts, Brockville, Ontario, and Alberta, Canada. Within that, we handle all the IFTA mileage tax reporting, as well as the IRP, licensing and permitting, the Federal Heavy Vehicle Use Tax Form 2290. Also oversee the fuel tax refunds. So refunds on tax paid fuel that's used in a vehicle that is not being propelled down the road. So essentially refrigerated fuel. We also get to some PTO refunds for that type of operation. Been a part of DISA, and prior to DISA, which was OTS, prior to acquisition, been involved in IFTA and mileage tax as well as IRP for 23 years now. So been around the block myself as well, and look forward to participating in these discussions here today.
Thanks, Eric. Sounds like a lot of us started when we were maybe 10 years old, but we're not going to date ourselves on this. Rachel, if you could give us a quick background, we'd sure appreciate it.
Sure. I'm Rachel Irwin. I am located with DISA out of our Hudson office. I'm a transportation specialist in our licensing and permitting department. I have about 10 years of experience in trucking. Started my career with a trucking company as a dispatcher, GDS Express. They are no longer in business. And in 2018, I joined DISA, where I focus on setups and shutdowns, IRP, renewals, supplemental ads, and permitting in various jurisdictions.
Thanks. All really good stuff in regards to keeping vehicles compliant and on the road. And that's really what we're going to be talking about a little bit more today. Victoria, last but not least, if you could give us a quick background, that'd be great.
I'm Victoria Van Gogh, based out of the San Diego DISA office. I process the IRP for our California clients. I also process some of the IFTA 2290s and UCRs, just some light permitting. Been processing for about 3 years now, 3 to 4 years, not as long as you guys, obviously, but yeah, that's about it.
Welcome. Thanks for that great insight. So as you can see, we've got a wide variety of experience on the call today. Some of us at the level where we're actually processing work, and others that are driving change for the future. So it's really good to have all of you. I'm going to go ahead and jump in. Obviously, the introductions are out of the way into today's discussion. I'm going to start with Carmen, and I'm going to throw the first topic your way. Again, this is a roundtable event, so anybody on this panel is free to give any sort of insight or knowledge, which is really what we're trying to part with today, to better educate the folks that are listening to this seminar. So, Carmen, kind of give us, because it's an integral part of carriers around the country, how they move across interstate lines. We're going to focus for a minute on fuel tax reporting. Carmen, give us some background on how it evolved and really why it evolved and why it's in place today, and why it's so important that carriers understand the requirement and all of the different things that go along with fuel tax reporting.
Yeah, great question. Great way to start, Ray. So first, let's just talk about fuel use tax a little bit and why we have it, right? So if you think about it, every state every jurisdiction, Canadian jurisdiction, every United States, and the federal government has to have a dedicated source of revenue to maintain our infrastructure. And so up until this point, the dedicated source of revenue has been fuel use tax. And you typically pay that as a user when you go to the pump, right? The taxes are included in the pump. And so why do we have this tax reporting for fuel use tax, especially on commercial vehicles? Because if you think about it, the Class 8s, for example, do the most damage on the roads. And so if they travel, for example, from New York to California, and they do not stop at every state to fill up at the pump, then they are not paying taxes to that jurisdiction that they just drove through and use those highways. And so there has to be, to make it equitable, there has to be some way for that state to get that source of revenue. So when a truck passes through a state and they don't stop and fill up their tank and pay taxes at the pump, then they have to pay what's called use tax, fuel use tax, right? And it's only fair that you're using the highways of that state. That's a dedicated source of revenue to maintain those funds. And so every state instituted a use tax return where you would pay the taxes if you drove through that state. Same with Canadian provinces. And so really, just to talk about IFTA a little bit, prior to the mandate for IFTA, going back many, many years ago, and it does age us, if you were a carrier that drove through every state, you had to obtain credentials from each one of those 58 jurisdictions that you drove through, for example. You had to file separate tax returns with each one of those states. You were subject to audits by 58 different jurisdictions that you traveled through. And so it was very cumbersome, very laborious for carriers to keep up with all those regulations. Each state had different laws, different rules. And so it really started in 1982. There were 3 jurisdictions that got together and said, you know what, why don't we try a cooperative agreement? And that really became the foundation for what's known as IFTA now, the International Fuel Tax Association. And then, of course, lobbyists, there were a lot of lobbyists that lobbied Congress to make it law. And so in 1991, it was signed into law, the so-called ICE-T legislation that basically mandated that any jurisdiction that wanted, any United States jurisdiction that wanted to charge fuel use tax had to comply with the IFTA agreement. And so that really mandated that every one of the 48 contiguous states join IFTA and be in compliance with it. And so that created the whole base state concept. I'll try not to take up too much time, but I think it's important, right? So what changed for carriers, for example? So now if you are based in the state of Texas, you only have to file 1 return. On that return, you're going to show all your operations through every jurisdiction that you traveled through. And the great thing is, in the past, where you had to wait to get a refund from one jurisdiction that you bought more tax-paid fuel in, you might wait 6 months to get your refund in the past and still have to pay all the jurisdictions where you didn't buy enough tax-paid fuel. Now you file 1 return, you net the refunds against the tax that you owe in those jurisdictions that you didn't buy enough tax-paid fuel. So it's all on 1 return. You file that return with the state of Texas, you net it all out, and you're either due a refund or you are owed some amount which you'll just pay to the state of Texas. And then Texas and every other one of the 58 jurisdictions that are members of IFTA will send us all that data. We net it all out. We collect all the revenue from each jurisdiction, and then we distribute it to the jurisdictions that are owed. So in a really quick nutshell, that's what it is. It is a huge benefit in it for industry. They only have to get 1 set of credentials now, which allows them to travel to all 58 member jurisdictions. They only have to file 1 return. They don't have to wait for the refunds. A huge benefit. And it's also a benefit for jurisdictions in terms of cost administration. They now have 57 other jurisdictions that are doing audits on their behalf. And also there's 1 set of rules now, right? 1 statute that carriers just have to comply with. They don't have to worry about 58 different set of laws. It's 1 law that every state has to comply with. So a huge benefit to jurisdictions. And so that's why you have to file your returns.
Great insight. And when you look at the amount of fuel collectively that's purchased by some of these carriers, we're talking billions of gallons, right? And I know your organization, we use the word clearinghouse. So Carmen's organization is the clearinghouse to make sure these jurisdictions get paid or pay. I mean, can you share with us what, at a very high level, what sort of numbers you run through your system?
Yeah, and I think you're right. It is billions of gallons that pass through. So the IFTA is a quarterly return, and for the year, for example, we pass through about $600 million a year of fuel use taxes, and that's on a net basis. So that is not the gross amount. In other words, the gross amount that commercial carriers 26,000 pounds and above actually pay in fuel use taxes is about $2 billion a year. But on a net amount, what we collect and distribute to jurisdictions is about $600 million on an annual basis. So, and the miles are in the billions too. I could get those statistics for you. It's a lot of miles, a lot of fuel that we're talking about. And so, up to this point, hopefully we'll have some time to talk about what may change in the future, but fuel use taxes. And the unique thing about fuel use taxes is it's a dedicated source. Unlike other taxes that you pay, it doesn't go into a general fund. When you pay fuel use taxes in a particular state, it is dedicated primarily for maintaining the infrastructure. So
awesome, great insight, Eric. I'm gonna push it over to you, kind of on the same fuel tax reporting topic. And our world has changed, and again, Carmen's going to give us some insight on how it's going to change more in the upcoming years. But I think a major shift for us was when ELDs were implemented. And prior to that, we were basically handling things on a manual basis, where a trucking company or a truck driver, he or she would fill out a trip report. And then if they purchased fuel, they'd have a paper fuel receipt like you would get at the gas station today. And we would literally input that data into some sort of platform and come up with a tax return. Fast forward in today's technology, an ELD, all of that data, along with the coming out of the telematics out of the vehicle, and also being able to collect fuel tax receipts electronically, give us a little bit of insight on how we marry that together and create that return for the client.
Yeah, sure. So there's definitely been a transition over the past number of years with the ELD mandate. I guess the one thing that we're fortunate enough of, we've been working with ELD and GPS providers for a very long time. With that said, since the ELD mandate, the amount of manual records that we handle has diminished significantly. So as you alluded to, Ray, we're no longer keying in manual trip records, which constitutes, vehicle odometer readings, calculating the miles by state. It's all a manual process. Same thing with fuel receipts, keying in manual fuel receipts. And, those come with their own challenges. Back in the day, you would constantly get these envelopes that would have coffee stains and cigarette burns and stuff, and having to navigate through that. With the ELD mandate and the increased use of fuel cards, it's essentially become much easier for us to collect the data, calculate the distance and fuel, and to even audit the data. We're able to get the data in a much more timely fashion. The data, by and large, not to say that there aren't the occasional issues or outages or tampering with the GPS devices, but by and large, the data is much more accurate, which helps with minimizing any audit exposure. So that has been a welcome change, for the most part. And I think I could get into it now, Ray, or I think we're going to touch a little bit more on the ELDs and the change later, or.
Yeah, we'll touch on ELDs a little bit later. I wanted to focus for a moment on fuel tax, so I appreciate the insight. Sylvia, I know you're relatively new to the fuel tax world, but as a user, what comments do you have about ELD technology, fuel tax reporting at a at a level that, is dealing with this as a corporation every day?
Well, presently, what they have me doing to prepare for the filing is to verify the purchases. And we're talking something like 10,000 records that have to be verified just for 1 month, 10,000 plus. And I'm just trying to understand how all these records or these numbers are not being captured electronically. I mean, I thought this was supposed to resolve all that, and why there's such a discrepancy in verifying the actual purchase. Sometimes it is capturing 2 or 3 units in the same area, but you put the transaction number in and it gives you the 3 different units. And the way you pick out the one that goes with that purchase is it'll show the dollar amount next to that particular unit. And then you know who actually did that particular transaction, and you verify it. And I've timed this. It takes 30 seconds for each unit I'm verifying. And it's like really frustrating for me as a person that's really busy and doing other things at the same time to sit here and wait 30 seconds for every record to be verified by this one provider. And I've questioned it, and they said, well, it's just a little lag in time. And I still think there's an issue here to be addressed. It appears it's a simple process, but the other question I had is there's also the issue of hours of service. How's that being captured electronically?
Yeah, great stuff. And you're at that user level, the frustration level for the actual user, depending on the technology that they're using. Marrying these 2 pieces of information together is sometimes really cumbersome. So the hours of service topic, we may touch on that today. They run hand in hand. We could spend an enormous amount of time talking about hours of service and how ELDs are supposed to solve that issue for us. But we all know in industry that there's concept and then there's practicality of what really happens. And it seems like on your fuel tax reporting and fuel purchases, that might be happening a little bit as well. So those are the pain points that some of these carriers are feeling. Sylvia's feeling it directly, but I think with technology advances and some of the things that Carmen and Eric and company are going to talk about a little bit might help you a little bit. So let's move forward if we can.
Actually, if I could just add a little bit to it,
Sure.
I think Eric said it perfectly. It does age us a little bit, but when I started out as an auditor in New York, I remember those dusty old log sheets, that somebody would bring up from the basement. In fact, one audit in particular, I remember sitting at the kitchen table. She brought up all these old dusty records, dogs humping my leg under the table. The kids are walking around with their peanut butter sandwiches on my work papers. And that was before I had a laptop too. So what's the point? The point is technology will continue to drive this industry. ELDs, certainly the information that you can obtain from that is very helpful to the IFTA record keeping requirements. I caution, and I say this, I do a serious radio show too, and sometimes we get drivers that'll call in and ask about record keeping requirements. ELDs can be used, they're great, but typically the contracts that people have with their ELD providers only maintains those records for 3 or 6 months. And so it's extremely important that when we talk about fuel use tax, that you need to keep those records for 4 years, minimum 4 years. So.
Yeah, and to touch on that too, Carmen, that's a very good point that the ELD vendors themselves will only maintain that data for a short period of time. And in the event of an audit, if you need to get that data, they can get it for you, but it's at a pretty steep cost. Whereas us, DISA or, many of the other vendors that are out there, we may maintain that period. We actually maintain it for a 7-year period to comply with New Mexico and their audit statutes. So, and that's usually, is built into our pricing. So.
Yeah, and Sylvia was talking, she had a good point about, how do you verify fuel receipts and that. So, and I'm sure you guys do this too, but when you couple the information that you have available from the LD along with a fuel card, if the carrier has a fuel card, it's going to make their life so much easier. One of the things we do accept when it comes to IFTA record keeping requirements is just a summary report from either a credit card company or a fuel card like that. That is sufficient enough to verify that you bought tax-paid fuel. So huge benefit to carriers to have those two things in place.
Awesome. Really, really good stuff. We're going to switch gears for a moment and talk a little bit about IRP. IRP and IFTA are really hand in hand. They both work integrally together. Rachel and Victoria, you're both at that level where you're processing this information for various clients. Give us a little background on IRP, how that benefits the client, how it works versus the typical intrastate, we call it base plating requirements that a customer could have, so that the group can get a little bit of insight on that.
Sure. Well, IRP is a national registration plan. It is a agreement amongst 48 U.S. states, the District of Columbia, and 11 Canadian territories that recognizes registration for vehicles as they travel through the various jurisdictions. One of the benefits to registering with IRP is that you can travel through multiple jurisdictions and you only have to pay your jurisdiction your registration fees. They'll then, through a clearinghouse, send the fees to each of the corresponding jurisdictions that would correspond to the mileage that was traveled by your vehicle in the jurisdictions based off of the reporting period. That tends to align with the 2290 HVUT from July through June of the previous year. It differs from base plating because base plating is located to your sole jurisdiction where you are operating out of. And that is generally based off of your vehicle's weight, but each state is different. And they do have different names for each of those plates. So it is always recommended to contact your base jurisdiction to see what plate would be required for your vehicle if you're operating a commercial vehicle over 10,001 pounds.
Yeah, great insight. Victoria, what comments would you have on IRP? Again, I know you're at that line where you're processing this information specifically in California, but obviously it's a nationwide program that benefits the client. So just interested on what your thoughts are.
So I find that one of the biggest benefits, especially for people who are thinking about possibly going out of state or are starting their business, is that they're not having to pick up the trip and fuel permits every time they do go out. That is one of the main benefits of having IRP. And if you're not having to pay out every single time, and if by chance, for whatever reason, you do get delayed, you're not having to pick up that extra permits for each trip.
Awesome. Great insight. Sylvia, as a end user of IRP, do you have any wisdom and insight for us on how it benefits your company?
Well, I was involved in the processing with IRP. I'm very familiar with it. I did it at On the Go, as well as the only drawback here is, I'm just sending it to DISA to process it, where before I could actually just go online and take care of it myself, being an agent. But being familiar with it, it's beneficial to the carrier because it's very time consuming to stop, call, I need this permit. And then you don't know how long that permit agency is going to take if you don't have an agency to go through to obtain that permit for you. And you can be on the phone for hours. They have to sit and wait until they get that permit. The same goes with crossing into Canada. It's very beneficial to have those provinces already on your portion registration. And it just simplified the operation for the carrier a great deal. And I know from setting up accounts that you would only use your intrastate if you're not going to go out. But there's always that, the beauty of it with an intrastate is that you can go out, but you would have to again buy the permit to whatever jurisdiction you're going to go into. As the others, you are like Rachel said, you pay a portion based on the miles traveled and fuel used to each state, but only California would collect all those fees if you're a California-based carrier, IRP carrier, and then they would distribute out based on whatever the operation is in the other states. And they went away from the estimated mileage, so that helps a lot too in the last couple of years, not having to sit here and figure out, how many miles am I going to travel in there if I need that state. So now you just get them all. And it's based on the California's estimated mileage, because we're a California carrier, but it would be based on Texas or Florida, depending on where you're base plated. And of course, wherever you live dictates where you need to be registered. So, or where you have your operation. And like Hanson could easily move it to Florida because he has offices in Florida. But that's the beauty of having IRP, is that you could set up anywhere in the US jurisdictions as long as you have an office there to operate from.
Yep, great insight. We'll switch gears a bit. We talked briefly about ELDs and how they've impacted our industry. Eric, tell us a little bit about the changing trucking climate, how we manage that data. Of course, Sylvia alluded to fuel card receipts. How do we attempt to match those together? And dealing with the massive amounts of data that we are today, how do we scrub that so that the workload and the client gets what they need?
Yeah, sure. So, our primary method of obtaining the ELD data is through an API. So an established relationship, an API with the ELD vendor themselves. And with that API, we get the data automatically fed to us multiple times a day. It's the actual raw data that contains the unit, the date, the timestamp, the latitude and longitudinal readings, as well as odometer readings in most cases. We take that data in and it's run through a mileage engine to calculate calculate and allocate the distance traveled for each of the vehicles. Obviously the other main component of that is the fuel. And in most cases, we either request or we'll go out and actually download the fuel transactions ourselves. And so, we download those fuel transactions and we load that into our program as well. And then we kind of marry the two together, the miles and the fuel. And it's pretty much audited, down to the unit level. Doing some compliance checks and looking for fuel transactions that that we've identified that were in a state for a given period of time in which there's no travel. So with GPS, assuming we have a complete GPS throughout the month, we've got it's real time essentially. So if we have a fuel purchase in Illinois on the 10th of the month, we should see distance in Illinois in the month, or in Illinois on that same date. So that's a primary check. And if we don't see distance there, that is kind of a fuel transaction in itself that can be flagged. And in many cases, in working with the clients, we realize, whether the company hit the slip seating or the truck was down, they get another truck, but that fuel card is assigned to their primary truck number. Now they're in a secondary truck and it's not recorded properly. So it's a matter of identifying that and moving that fuel transaction over to the vehicle that actually purchased it. So, with kind of doing those audits, and there's some other ones beyond just looking at what we call our fuel air conflict report. That's how we can minimize and not be necessarily be looking at every single transaction. Is to where if we've got fuel, in a state where we have travel in that same state, or I should say jurisdiction, we can, with a high level of confidence, remove having to drill into those fuel purchases and focus on the vehicles that have fuel, maybe no miles, or fuel in a jurisdiction where we don't have any travel. Some of the other things, I guess, that we're encountering now with ELDs and changing. There's a lot of movement and even acquisitions, but a lot of movement between vendors. There's a number of reputable vendors out there that you can use for your ELD and GPS, and I guess that is one important factor in making the decision to go with an ELD is to make sure that they meet the IFTA and IRP requirements and not necessarily the DOT requirements. DOT requirements and IFTA and IRP are quite different, especially in terms of the frequency in which we would receive the data. But right now we're seeing a lot of movement from one ELD vendor to another, which is fine. There's just some checks that we ensure we want to make. A lot of these companies will be running the two ELDs simultaneously, and we want to make sure that we're not getting data crossed and we're got the vehicle pinging every which way because the time zone is different on one system. We want to vet that type of information out, and as best we can have a clean cutoff when they transition. And the part of that is just kind of onboarding, making sure we're aware of which vendor you're going to be working with, so we can validate that we work with them, we know they're reputable, and then start down that process to being able to have that data fed to us in a timely manner. So once you make that full transition, we're able to hit the ground running.
Yeah, if I could just add too, so certainly you could see the benefits from the carrier point of view, right? Again, talking about the old days when they had to maintain separate log sheets and supposedly pull over when they crossed the border, and now imagine the fuel receipts too, right? They had to maintain all those actual individual fuel receipts. Typically, they'd have to write the unit number down. A high risk of losing those receipts. So certainly, ELDs and the fuel card system is a big benefit to carriers, but you know what? It's also a big benefit to jurisdictions too. Coming from the audit standpoint, imagine how labor intensive it was for an auditor to come in and have to go through each individual receipt, tie it to a unit. So not only is it a huge benefit for carriers, it's a huge benefit for jurisdictions too. Now it's much easier to do an audit. We can actually download the data that you guys have, and we can reconcile that, very easily too. So technology is going to continue to drive this industry, no question about it.
Great insight, guys. I really appreciate that. I was on a call with a client this morning, and they were talking about their ELD provider. And since implementation, they talked about a 4 or 5 year cycle with that vendor, because technology does change quickly within that ELD device. And they were actually telling us that they go through this 4 or 5 year cycle, and then they would start to look for another provider. So it's important that we all work with all of these different providers at different levels and are able to adjust to the different ELD and telematics units that we're working with. So we, like Eric said, we're seeing that a lot in the industry right now. We're seeing a lot of shift. So being able to be nimble and being able to make that transition is, it's important for us, but as more importantly, it's important for the carriers as well. I wanted to spend, we have about 5 or 10 minutes left, and I really wanted to spend a little bit of time, and I mentioned it at the earlier in the presentation, to focus on what's coming in the future. Carmen and I and Eric also have spent a lot of time at different conferences hearing about what's coming. The American Trucking Association is very passionate about change. The state jurisdictional trucking associations that we're part of are on that same page. But then you involve IRP and you involve the IFTA organization, which obviously Carmen is part of. We all kind of need to be on the same page. And I'm not going to take Carmen's fire or thunder away from his presentation, but I think about vehicle electrification, how that's going to change our landscape moving forward. We hear about vehicle-based mileage taxation. What does that mean? What could it potentially mean for the industry? And how do we shift our focus away from this traditional, we call them ICE, right? Internal combustion engine vehicles, to electrification, CNG, hydro. There's all kinds of technology that's out there now in a test phase. So Carmen, I'm going to turn it over to you because I know you're passionate about this and you have a lot of insight. But for the others on the panel, Eric, certainly Sylvia, if you have insight or comments that you'd like to make, please feel free to do that. So Carmen, I'm going to shoot it over to you.
Yeah. Thanks, Ray. You know, we could spend probably hours talking about this, and I spent a lot of my time going to different conferences, participating in panels and study groups. And as you already know, at our events at IFTA, I continue to convey this message because a lot of people don't want to believe the world is changing, but it is changing. I could talk about, for example, mandates that are in place right now. For example, and by 2030, most individual passenger vehicle manufacturers, Ford, Chrysler, Toyota, you name it, they all have internal mandates that say by 2030, 2035 at the latest, the only thing they will produce is electric passenger cars. And so why do we care? Why do we care from the perspective of commercial vehicles? Because once that happens, and there's no longer individuals stopping at a gas station to pay taxes, and as we already talked about, that is the source of revenue to maintain our infrastructure. If that goes away, because there's nothing but electric cars on the road, and I realize, of course, there's still going to be fossil fuel roads. It's not fossil fuel cars. It's not going to be a switch where suddenly there's nothing but electric cars. But actually, from 2030 to 2035, that transition period, you're going to see a proliferation of electric passenger vehicles on the road. And so each jurisdiction is looking at it, along with the federal government. The taxes are going to have to come out of the pump, and we need some other way to sustain a source of revenue to maintain our infrastructure. And so when that happens for passenger vehicles, once you take the taxes out of the pump, something's got to change from the commercial aspect too. Because when they go to the pump, they're not going to be paying taxes at the pump anymore. So there's no longer that revenue to come in to maintain the infrastructure. And this is just reality. I know people say, nah, it's never going to happen. It's never going to happen. I've been to enough conferences. I've heard enough CEOs from manufacturers, and I know how much is invested in this. There's not billions, there's trillions of dollars invested in so-called electrifying the nation, and not just our country, but every country. There's something called the Paris Accord. I won't get into everything. Their federal government is looking at mandates right now. They have a huge amount of money just invested in a study group, a national study group, to come back within a year with a plan and a pilot program on how we're going to change the source of revenue for passenger and commercial vehicles, because they know electrification is coming. So from the commercial standpoint, what you're going to see, and by the way, those internal mandates for Ford, Chrysler, all that, all the major manufacturers of Class 8 vehicles also have internal mandates. A little later in time, but again, by 2030, that transition period, 2030 to 2040, which sounds like a long way off, it's not. All the internal mandates that they have say the same thing. By then, by 2040, for example, you won't be able to buy a Class 8 vehicle that is not either electric or hydrogen. Those are the two things that are going to drive our nation. And so it's coming. And so a change has to occur. We're no longer going to be able to get the revenue from fuel use taxes. How are we going to get it? What is going to be that dedicated source of revenue to maintain our infrastructure, to make sure our roads are safe, right? And you know, up to date for our carriers. So I think what you're looking at, what these study groups are looking at is, for example, can we replace fuel use tax with some kind of pay per mile, some kind of vehicle mileage tax, not only for passenger vehicles, but for commercial vehicles too. And so we want to be proactive at IFTA. So we're involved in all these different groups. I hope to be part of this national group that's coming out, because we want to say, and we want to bring all of our jurisdictions together. Because the one thing we don't want is for each jurisdiction to suddenly make that change and go out on their own and end up to the days, before IFTA. We want that uniform approach. We want the base state concept. I think what's going to have to happen is the IFTA agreement's going to change to say it's no longer a tax based on fuel, but it's a tax based on mileage. And so there's a lot of things that have to happen, a lot of things we need to think about. We just created our own alternative fuel study group, which hopes to get feedback from both industry and service providers like Ray and all you guys, because we need everybody's input in this. 8 years away is not that long, and it's going to take time to change the statute to get it right. So the time is now. The time is now to start thinking about it and being proactive about it. It is going to change.
Sylvia, any comments on what Carmen was just talking to at the user level?
I hope I'm retired.
I think a lot of it say that.
Yeah. No, yeah, it's very interesting and how everything is changing and where we're going with all of this, and I'm really interested in learning a lot of this and moving with it as long as I'm here. So yeah, I think it's the betterment for everything, even the environment. So we have to go with it. It is what it is.
Yeah, thanks for the insight.
I do miss though the paper logs that have 10 or 12 staples, and then the pictures for the holidays that the drivers would draw on them. But yeah.
We miss the pictures. We don't miss the staples. I think I should talk to everybody on the phone. Eric, what's your insight on the electrification and ever-changing landscape we have here?
Well, it's, I guess, could never be more appropriate in the fact that I've been on the phone for a couple of hours here today with clients discussing Connecticut. So Connecticut is, they've moved to the vehicle mileage. I need to say fee. They take offense to the word tax. It's this is just the latest state that is kind of made the move to go into a mileage-based fee, and to what Carmen alluded to, with working with IFTA, working with carriers such as yourself, Sylvia, we need to kind of try to implore, whether it be the governors of our states, our state trucking associations, whatever it may be, to try to stop that movement to where the states or jurisdictions, start implementing their own separate tax, because that's sending us back to what Carmen alluded to, what it was like in the 80s, and that's not that's what we want. That's just creating more work and for everyone involved. That is just one aspect. And as far as the electric vehicles, it will be here before we load it. There's a ways to go, but it's something that we need to kind of stay on top of as an industry as well.
Yeah, again, real quick, I know we're running out of time. Let me just add to what Eric said, because he talked about Connecticut. And I don't think a lot of people realize this. The loss of revenue, the gap between the amount of revenue that comes in from fuel use tax and the cost of maintaining infrastructure, especially for the federal government, let alone each individual state, has continued to grow. That gap has continued to grow, such that by 2025, the federal highway use tax fund will be bankrupt. There will be about $200 billion deficit. Up to this point, they've been pulling from the general fund to help supplement that. They've been sending it to jurisdictions, but they can't continue to do that, right? We're going to, increase that federal deficit too much. So what you don't want, and what Connecticut did, is trying to supplement that loss of revenue through something else, right? Through a mileage-based tax fee, whatever you want to call it. And so that's what we don't want. We don't want that at IFTA. That's why we're trying to bring jurisdictions together now. We don't want 58 different jurisdictions going off on their own to try to supplement the loss of revenue. And instead, there's going to be a replacement for fuel use tax, just one vehicle mileage tax.
Right. As a carrier, we did have to apply for that Connecticut hut. And I got a lot of flack from the terminals saying we don't go in there. Why do we need it? I said, you put it on the truck, whether you need it or not. All we need is a driver to stray in there and not have it for whatever reason he may need to just stray in there, but put it in the truck. At this point, that permit is free.
Yeah.
And it's just issued as a copy. But, you know, again, it was an inconvenience for us because we have a lot of trucks. And I said, it's just like the UCR, just put it in the truck.
Yeah.
You
And
have to have it.
And Sylvia, it's a, just so you're aware, yes, put it in the truck.
Mhm.
It's $1,000 fine.
Right.
But then if you're cited and they don't have it in the truck, so.
Exactly.
All right, guys, that's going to wrap up our session today. Some really, really great discussions. Again, I appreciate you all taking the time to jump on this panel. I think it's very insightful. Key takeaways, there's change coming. And how do we adjust to that change, whether you're a service provider, an actual end user, or part of an organization that helps manage all of these different things that we do. So I know the guys and gals that are going to see this presentation are going to get invaluable information from it. So again, I appreciate you being here today, and enjoy the rest of your day. Thank you.